In today's video, I want to talk about what is sound money. We just keep printing and printing and printing. Do we need some sound money policies? Go back to the old days? Maybe the old works. Let's get into it.
Angels we have heard on high, sweetly singing o'er the plain, and the mountains in reply.
Governments around the world have authorized 11 trillion of fiscal programs to mitigate the economic and social fallout from the COVID-19 pandemic. Those programs will cause sovereign debt burdens to exceed 100% of global GDP by 2022. Absolutely insane. That's, it's surpassing the record set during World War II. Central banks have supported government spending and stabilized financial markets by purchasing roughly $6 trillion of government bonds and corporate debt and other assets. So everyone's saying this is just spiraling out of control. We're just printing. There's a group of people that are talking about sound money. Bring back Glass-Steagall. To break the global doom loop and restore financial stability, we must adopt a new Glass-Steagall Act. So a little history on this. The original Glass-Steagall Act of 1933, bottom line, supported stable financial markets and prevented systemic financial crises for more than 3 decades after World War II, when you look at the history. And Glass-Steagall, bottom line, separated banks from the capital markets and prohibited non-banks from accepting deposits. So we all know it's tried and true today, started in the past. Gold and silver. I'm buying silver the last 10 years. Gold and silver are money. They're money, not by government decree, but because they have proven to be over the test of time by maintaining their value. So if you look at the history of the Banking Act of 1933, Glass-Steagall, the Glass-Steagall Act effectively, this is it, separated the commercial banking from the investment banking and created the Federal Deposit Insurance Corporation, among a lot of other things from the research. And I've known about the Glass-Steagall, researching this 15 years ago, and I don't want to get too into the weeds. So it was one of the most widely debated legislative initiatives before being signed into law by Franklin D. Roosevelt in June 1933. The measure was sponsored by Senator Carter Glass. He was a Democrat out of Virginia, and Rep. Harry Steagall, he was a Democrat out of Alabama. And Glass, a former Treasury Secretary, was the primary force behind the act. Steagall, then, he was chairman of the Housing, Banking, and Currency Committee and agreed to support the act with Glass after an amendment was added to the permanent bank deposit insurance. So, in a nutshell, commercial banks which took in deposits and made loans were no longer allowed to underwrite or deal in securities, while investment banks which underwrote and dealt in securities were no longer allowed to have close connections to the commercial banks, such as, overlapping dictatorships or common ownership. So separated the two institutions, and there was a broad belief that the separation would lead to a healthier financial system. It became more controversial over the years. In 1999 is when it was overturned. The Graham-Leach-Bailey Act repealed the provisions of the Banking Act of 1933 that restricted affiliations between banks and the security firms. And that's when the downfall began, a lot of people believe. So maybe, in my opinion, some new form of Glass-Steagall. It's not it won't fix Wall Street from the research and my learnings, but it could help. For example, others would say Glass-Steagall won't work. I think the real problem is the investment banks and commercial banks they become risky when there is a large proprietary trading and private equity hedge fund inside the bank comprising a significant percentage of revenue. This is where the real danger lurks from talking to IE bankers, and such trading should be strictly limited and regulated. A lot of shenanigans going on there. So that's my opinion. This kind of transitions into sound money. The 2021 Sound Money Index is the first index of its kind, ranking all 50 states using roughly 12 indicators to determine which states offer the most sound money environment in the country. So the SMI uses 12 criteria to determine which states maintain the most pro and anti-sound money policies in the nation. So sound money is discovered, not invented. Though market processes and the most marketable commodity, as Austrian economist Karl Menger described money, makes itself known, he said. So take a look at this. This is interesting. Sound money states, when we break it down, Wyoming, Texas, South Dakota, Alaska, and New Hampshire are the 5 most pro-sound money states in America, according to 2021 Sound Money Index. Meanwhile, Vermont is ranked absolutely dead last. So what is this index? This is interesting. The index evaluates each state's sale and income tax policies involving precious metals, whether a state recognizes the monetary role of gold, silver, and the U.S. Constitution, whether a state holds pension reserves or bonds in gold and silver, or whether a state has imposed precious metal dealer, investor harassment laws, and other criteria. So they really got into the micro and minutiae of this. The report was released by the Sound Money Defense League and the Money Metals Exchange groups. And if you look at Utah and Washington, round out the 6th and 7th place range on the overall index when we look at the top 50 states. So during 2021, Arkansas and Ohio each ended their sales tax on purchases of precious metals in their states. So they joined 40 other states and have already ended this unfair practice. Arkansas and Ohio rose from 49th and 45th place to 33rd and 20th place, respectively, on the list. So talk about the Buckeye State. Buckeye State made a comeback as well in the past 2 years when Ohio pension trustees decided to allow 5% of retirement funds to physical gold, and then the legislature reversed its prior decision to tax the sale of sound money. So Ohio has fallen near the bottom of the index, but has now worked its way back into the top 20. These elites are trying to take all the gold, man. So they don't want you going back to sound money. So in fact, Ohio now stands as the only state in the U.S. Currently known to allocate a percentage of state-held pension funds to physical gold. That's a great thing. So that's a great thing what they're doing. So according to the index, the very worst environments for sound money can be found in Vermont, New Jersey, Maine, Kentucky. However, New Jersey, Maine, and Kentucky are expected to consider bills that would improve their ranking in their upcoming 2022 legislative session. So we'll have to see about that. So we all know in the media, I've been talking about inflation for over a year and a half. It never was transitory. Inflation is becoming the top economic problem facing America as politicians and central bankers continue to create trillions in unbacked currency. Okay, it's unbacked currency. Sound money has never been more important right now, ladies and gentlemen. Citizens in states that foster pro-sound money environments can better protect their savings right now. You have to be on the ball, not just rely on your financial advisor, but watching your money daily and studying. So, but for more than a century now, the federal government and the Federal Reserve, a privately owned bank cartel, privately owned, which enjoys a federal charter, have warned against sound money in America. They ended the free circulation of gold and for a time criminalized its ownership, if you look at history, while taxing those who sell, spend, or exchange it. So unbacked paper currency and electronic credit have replaced our constitutional money, gold and silver. It's unfortunate. So does the state levy income taxation against gold and silver coins and bullion? You know, that's a question. The Federal Reserve's inflationary policies erode away at the purchasing power of the Federal Reserve notes, decreasing the value of each individual note in your wallet as, you know, the time goes on. So yet us taxpayers are not entitled to deduct the staggering capital losses that we incur when holding depreciating currency. So why should they be forced to pay income taxes on nominal gains when holding monetary metals, right? So if you look at the regulations, under the IRS regulations, those who own gold and silver to protect against devaluation of America's paper currency must report any realized gain in terms of Federal Reserve notes. This is not necessarily a real gain. It may, you know, entirely be a phantom gain that results from the inflation created by the Federal Reserve. You know, but the U.S. government and most states assess a tax on that supposed income anyway. So that's interesting when you break it down. A little confusing. You know, states that remove income taxation from the monetary metals are taking an important step towards adoption of sound money. When you look at the research on this, you know, I think, you know, the constitutional framers were mindful of the hardships brought, you know, and the fiat paper money issued by the Continental Congress to finance the revolution. Notable, you know, founders, including Thomas Jefferson, George Washington, James Madison, Thomas Paine, warned about the ravages of issuing unbacked currency when you look at the history, and they were spot on. They were ahead of their time. That's why the Constitutional Convention overwhelmingly, if you look at history, the Constitutional Convention overwhelmingly embraced gold and silver. You know, Washington wrote, take a look, that paper money was wicked. Madison called it unjust and unconstitutional. Jefferson wrote that it's paper money's abuses that are inevitable, and by breaking up the measure of value, making a lottery of private property. So maybe we need a better balance, okay? While the debasement of the Federal Reserve note, commonly known today as the dollar, is in large part the result of inflationary policies enacted by the Federal Reserve System. Absolutely 100%. Its effects are, pervasive. You know, governments can fund enormous welfare states, while everyone holding the currency can only watch as their wealth is sapped away. The United States is a welfare state, the biggest welfare state in the world. Tens of millions of Americans and their employers pour money into pension funds each month, counting on those funds to grow and be there when they need a retirement. But if you've been following the pension funds, it's a little nerve-wracking. The time bomb awaits. The bulk of U.S. pension funds are dangerously underfunded right now. And the assets are often invested in securities that have bleak prospects for, providing returns that keep up with a general decline in the Federal Reserve's note purchasing power. So that's a little nerve-wracking. Money is not, is not a creation of government. They sure are printing a lot right now. The process through which money was created was not one of central planning, but of markets. So gold and silver were chosen as tried and true money by the free market over thousands of years, and should be recognized as money. I guess, I think when you look at the history of the Constitution, it's a phenomenal document. It was ahead of its time. When you look at what the Founding Fathers envisions and described in Article 1 and Section 10 of the United States Constitution, states should reaffirm gold and silver as tender in payments of debts. By acknowledging gold and silver as real, money, states and citizens will be more likely to use them in transactions. So, the root of the problem, and to sum this up, is in the federal policy. However, there are practical steps that can be taken at the state level to promote and use acceptance of sound money, which is a good thing. If the states take, unless they get strong-armed, which seems to be happening when you look at the tea leaves and follow this stuff, and I contact people in other states that work in politics on local levels. So I'm a big fan of gold, silver, Bitcoin. I do a lot of studying of Bitcoin, and I know people in the space that work for investment banks. So you're not a Bitcoin expert if you just do trading on Coinbase and you call yourself you're a day trader of Bitcoin. Are you a certified financial accountant? Or do you have a certified financial certificate degree? I'm just saying, or have you worked for an investment bank? Did you study finance? Not saying you can't be successful if you just sit in your basement and do YouTube videos on currency and you read books. Absolutely, sure. But I don't trust people that haven't, they're not in the game. So I got certified financial advisor certificate and went through training and did all that. My dad's a stockbroker, an accountant. Other people in my family have a certified financial accountant degree, work for investment banks. So I've been around this and I study, and I have friends that are in the space daily, and I'm in the space, Bitcoin. And, there's a lot of chatter, there's a lot of other Bitcoin and cryptos you can buy, but I'm a big fan of Bitcoin. I think you should buy Bitcoin every week. I know I have people that said it's over 27,000, you should pull back. I don't think you should pull back. They should buy a little bit every week. If you can't afford to lose 10,000 or 100,000, then don't. But it's still, as long as there's nation states, there's going to be a protected economy. Okay, so unless U.S. and China collapse, the currency is going to be there, the U.S. dollar. And the Chinese currency is going to be there. So if you look at an asset class, Bitcoin is roughly $1 trillion asset class. Gold is 10 trillion. Gold is 10 trillion. So if Bitcoin went up by a factor of 10 to 20, it still wouldn't be a big deal. It would have to go up by a factor of 100 to roughly be 100 plus. To compete with the bond indexes and the equity indexes. So, when Bitcoin is roughly 100 to 110 trillion, it will only be about 10% of all the money in the world. 10%, that's it. So it's not a threat right now, but it's not a threat. It's not a threat to powerful and strong governments. Weak governments, it's a threat. So it's not a threat right now to the U.S., but the concern is the Fed doesn't like it. And that's what you crypto guys and gals got to be aware of. The Fed doesn't like it, so you need to stay on top of it and do your reading, because the Fed wants to develop their own coin. The Fed coin, the yen coin. China will come out with the Chinese coin. And China will probably, from my research, talking to people, will do it before the U.S. does. So knowing that the Fed doesn't like it, is a concern. You got to, if they want to get into the space, what happens to Bitcoin? But I think it's safe bet for another 10 years, whether it keeps going up and down. I think you should buy a little every week and just forget about it. I buy some every week. Put a little money in it every week. Don't even look at it. Just keep buying it. There's a couple other ones I buy, but I think Bitcoin's the best. Don't waste your time with anything else. There's another one I'll do a talk on that I'm buying. It's under 30 cents. I got it at 8 cents. It's up over 30. But I think Bitcoin, gold, silver absolutely should be part of your portfolio. And you should be buying silver. I've been buying silver for 10 plus years. And just buy a little bit. Gold's, yes, very expensive. I just got a little bit. But I think you can't go wrong with playing the crypto space. I know there's other gurus out there that say Bitcoin is going to crash. You should pull all your money out. I don't agree with that. But you have to be careful. You have to know what the future holds. And one thing that gives me heartburn is the Fed wants to develop its own coin, and the Chinese government. And if they do that, that's a concern. But like I said, it's a small asset class right now. It's $1 trillion. It's going to be safe for another 10 years. There's other guys out there saying the dollar's going away, and digital currency is not going to be so easy right now. You need dollars in your account. So dollar's a world currency. And like I said, if the U.S. government crashes and Chinese government crashes, yes, there is a concern. And maybe that could happen. Things are looking pretty crazy right now. All right, sound money, gold and silver, Bitcoin. What do you think? Do we need more sound money policies? And these dollars just being printed in mass quantities. You need to protect your assets. Sound money. Take care.